Welcome back to StockAnalytics.ai, the podcast that breaks down complex earnings reports into actionable insights. I'm your host, Anthony.
And I'm Cleo, your lead analyst. Adobe's Q2 2025 earnings are just out, and this is what you need to know.
Today, we're diving deep into Adobe's second quarter results for fiscal year 2025, dissecting the numbers to understand what it means for investors.
Adobe reported revenue of $5.873 billion, a solid 10.6% year-over-year growth. EPS, that's earnings per share, essentially how much profit the company made for each outstanding share, hit $3.94, representing a healthy 12.9% increase year-over-year.
Those are some impressive headline numbers. So, Cleo, overall, would you characterize this as a strong quarter for Adobe?
Absolutely, Anthony. These results point to continued momentum for Adobe. Their net income reached $1.691 billion, and with a net margin of 28.8%, they're keeping a healthy portion of every dollar earned as profit, indicating strong operational efficiency. Their operating income also saw a solid performance, coming in at $2.109 billion, with an operating margin of 35.9%, showing they're managing costs effectively. Adobe also highlighted achieving record revenue and a strong performance in constant currency, which simply means they adjusted the numbers to remove the effects of fluctuating exchange rates. This gives us a clearer picture of underlying growth.
So, despite the macroeconomic headwinds that many companies are facing, Adobe seems to be navigating the current environment quite well.
Exactly. Their performance suggests they're continuing to deliver value to customers and maintain a strong market position.
Let's break down the revenue streams now. Where is this growth coming from?
While the report doesn't provide specific year-over-year growth figures for individual segments, we do see that digital media brought in $4.35 billion and digital experience contributed $1.46 billion in revenue. Given the overall 10.6% revenue growth, it's likely both segments are contributing to this positive trend. Management's commentary highlights their momentum in AI and the continued adoption of their core services, which likely play a role in the top-line growth.
So while we don't have the precise breakdown, it sounds like both segments are pulling their weight, with AI and core services potentially driving the momentum.
Precisely. We'll have to wait for the full 10Q report for a more granular view of segment performance.
Now let's talk about profitability. How efficiently is Adobe converting sales into actual profit?
Cleo, as we mentioned earlier, the operating margin came in at 35.9%. This means for every dollar of revenue, they kept 35.9 cents as operating profit before interest and taxes. For retail investors, this demonstrates how well management is controlling costs. The net margin was 28.8%. That's the bottom line profit after all expenses. Think of this as Adobe's take-home pay from each dollar of sales.
And what about cash flow, Cleo? That's another crucial indicator of financial health.
Absolutely. Operating cash flow was a strong $2.191 billion. From this, the company pays for its capital expenditures to get to free cash flow, a key number we'll look for in the full financial statements. Having a strong operating cash flow is essential for investments, debt reduction, and returning value to shareholders. Their cash and equivalents balance stands at $4.931 billion, providing a significant buffer against economic uncertainty and supporting future investments. They also reported shareholder equity of $11.448 billion, representing the residual value of the company after all liabilities are paid. This gives us a sense of the company's overall net worth from an accounting perspective.
That's a healthy cash position. It definitely gives them flexibility for future growth initiatives. So, Cleo, what about Adobe's outlook for the rest of the year? What guidance did management provide?
Adobe issued forward-looking statements covering various aspects of their business, including strategy, AI innovation, market opportunity, and financial performance. They're optimistic about their AI momentum and market trends. However, like all forward-looking statements, these are subject to risks and uncertainties, including macroeconomic conditions, competitive pressures, and regulatory changes. They specifically caution investors not to place undue reliance on these forward-looking statements, as the final figures might differ from what is currently projected.
So, taking everything into account, what's your final takeaway for investors on Adobe?
Adobe delivered a strong Q2 2025, showcasing solid revenue growth, healthy profitability, and a robust cash position. Their focus on AI and the continued strength of their core services seem to be paying off. While the lack of segment-specific growth data makes it harder to pinpoint exact drivers, the overall positive trend is encouraging. Investors should keep an eye on the full 10Q filing for deeper insights into segment performance and free cash flow. Given the current industry context, Adobe's performance suggests resilience against macroeconomic headwinds. However, the potential for continued input cost inflation and geopolitical risks warrant careful monitoring.
So, a positive quarter overall, but investors should remain vigilant about potential challenges ahead.
Exactly.
That's all the time we have for today's earnings analysis. Thanks for joining us on StockAnalytics.ai.
Remember, this discussion is for educational purposes only and not personalized investment advice. Be sure to do your own research and consult with a qualified financial advisor.
Subscribe to our channel for more institutional-grade earnings analysis. Until next time.